What's going on, guys? Brandon here, Legacy Group Real Estate Team. We have your April 2020 Livingston County real estate market update. Let's jump right into this thing. Obviously, we've had just absolute massacre in the markets everywhere, and we've been all going through a lot of things here. And it's really time to get a hold of your financial situation. It's time to see where your expenses are, see where your assets are, your liabilities, see what cash flow is coming in and out every month, and understand where one of your biggest liabilities, I know many people think it's an asset, but one of your biggest liabilities, where that is and what kind of equity you might have in that home. And remember, an asset is something that puts money in your pocket every month, and a home is something you're paying on every month. So it's really a liability of yours. It's something you're paying on every month, and it's your bank's asset. So needless to say, it's still one of your biggest liabilities, and you're paying. It's probably your biggest payment every month, so you have to know what's going on with it, where your equity lies in that, because that's the only thing you can hopefully get out of it, possibly, whether it's a line of credit because you need some liquidity, or maybe it is selling the home. So let's jump right into this. Livingston County, April 2020. We have 3 years of data because you want to see the trend. It's going to be very important here when we're doing this to see the trend. And we have the last month here in arrears because we have all the data. It's fresh, hot off the press. So days on market, 56 days 2 years ago, 69 last year, and then back down to 51 days this year. And again, we're so close to the center of the storm that we're seeing, because of the low inventory, which you're going to see here in a little bit, we're getting higher prices and we're getting shorter times on market because of that. We're seeing that across the board. Active homes in the market. This is a 1-day sample size. The day the data was taken, how many homes were active on the market? 579 2 years ago, 635 last year, and 604 this year. So again, we are seeing a little bit of a drop. It's more significant in some of the other counties. Months of inventory. This is the rate that homes are selling. How long would it take to sell every last home if no new homes came on the market? Months of inventory. Getting a little windy here. 2 years ago, 3 last year, and now up to 4 this year. And we're seeing this trend, this increasing trend in every county, and we're headed towards more of a balanced market. For now, we'll see. But again, we're seeing a huge crush in demand, right? So there's a deflationary event like this. You got to stay home. Well, that means less people are out searching for homes, especially when you can't search for homes. So that's why this number is like this. And remember, 1 to 3 months is a seller's market, 4 to 6 is a balanced market, and then 7+ months of inventory is a buyer's market. New homes in the market, 468. And this is a month-wide number. So how many homes actually got listed that month? And this is going to boggle your mind a little bit. 468 2 years ago, 482 last year, is very consistent. 151 this past month in Livingston County. That is absurd. And again, seeing this across the board, I believe there's one county, I think Wayne might have been pretty consistent actually, but all the other counties just crushed. Very deflationary. So the price per square foot is $142 a square foot. 2 years ago, 144 last year, then 157 this year. Again, we're seeing that we're so close to the storm. We have low inventory. It's making prices rise here in the short term. And again, that's multiplying that by your square footage. So about how valuable is your house? Again, you need someone on our team. You need an appraiser, someone to actually come to your house though and get it appraised and get an actual value on your home, because this is a countywide number. Remember that. And then sold. This is the number of people actually closing on their homes and at the closing table signing. So 253 last year, or 2 years ago, 237 last year, and then 158, a big decrease this year. What is that? I mean, 30% decrease or more. I don't know, around there. It's rough, quick numbers. So huge decrease there. Again, seeing that across the board. Going forward, it's going to be absolutely crazy to see what happens. You would look at one expert like Ken McElroy per se, a bunch of rich dad advisors. They think the market's going off the cliff, and then you look at people that are out there as well. You got a lot of like the Wall Street people who think the market's going right back up, and look at the stock market, it's going right back up. I tend to lie on the side of you remember, we want to be in the middle. We want to be in the middle, on the edge, and we can see both sides of the coin. I'm on the side, I tend to see the side that we're going to be going towards massive volatility eventually here. So with that many people out of work, businesses closing down, that doesn't lead to good things. And in the short term, yes, prices go up sometimes, and prices are going up on housing because of inventory crush and deflationary event, but I can't see that lasting forever. So anyway, I appreciate you guys tuning in. This is, like I said, the most important investment that you have, the biggest liability that most people have, and you need to know where you stand. That way you can make the correct decisions for you guys, for yourselves. So appreciate you guys, your time, your energy. It's the most important thing we have. So I truly, truly appreciate it. If you have any questions, please go to @LegacyGroupMI, @LegacyGroupMI on our Facebook or YouTube channel, especially if you're on the podcast. Go there, put your questions, comments, concerns, tag people, share it, and we appreciate your time and energy. It's the most important asset we have. So we will see you guys in the next one, and stay safe.